Share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, crazy volatility is going on. We're going to address some of the patterns that are unfolding, and we'll get into tonight's video right now. Hey folks, sorry I was a couple minutes late. We're having a few issues here with the studio lights again. I'm not sure what's going on, but welcome to the Kendall Report. We're seeing some crazy volatility, to say the least. And if you recall yesterday, I was kind of amazed that our database had way more buys than sells after a big down day. And I thought, well, this is a positive. I mentioned that in the Substack last night as well. And basically, the scenario I was talking about is that we're going to be locked in this trading range. Well, we moved, 4% now with the higher opening tonight. We have actually moved a huge number. We were up 2.5%. Earlier today, the overnight, we came up. And, you know, yesterday's video I was talking about, is Trump panicking or all this stuff working? And what did they do? This is classic government stuff, folks, is they send out a messenger to say, hey, things are going to be okay. We're working, the deal with China is going to calm down. Well, nothing's changed, right? Other than the messenger showed up, and it happened to be Scott Bessent. That's all that happened. And these are how the markets react. So it's always bothersome when we're in this type of uncertainty and everything that I've been talking about. If we just look back in the last couple of videos, you know, I've been talking about some of the issues around everything from the tariffs to just a bunch of jawboning. I mean, this is, I'm going to say it, you know, somebody said I'm a mega fan. I'm actually data driven by everything that I see on my screens, my database, and I have a process that I've developed over decades, and I follow it. So I'm not necessarily mega. I'm looking at the data. So somebody said even Bob's actually starting to falter on the deal. I'm going to go a little bit further. Is that I really am concerned about this type of activity. It's very disingenuous, but the Fed's been doing it for years. They jawbone. I've talked about this in the past, that sometimes the Fed will come out and they'll basically just talk a big game and then do nothing, or they'll front run themselves. This is pretty typical as we try to deal with this. This is tough to trade, although the patterns were set up. I mentioned this in the Substack. We got an STX buy signal pretty much across the board, at least on the two indexes that I follow every night. And so we knew we were going to get a higher day. I think the title last night, you know, was Turnaround Tuesday is one of the things I talked about. Well, there was a big turnaround. And then as we look up, I'm just looking over here. I've got a short-term chart on this other screen here, but you know, we're looking at, you know, another 1.3, 1.5% gain again, and it's just amazing. So let's do this. We'll set up a little bit of what is happening right now. I'm just looking at tomorrow's news coming out, see if there's anything of material. We have S&P Global. No one actually cares about the S&P numbers. Basically, tomorrow we got new home sales coming out. That's expected to be 684,000. We do have global services, S&P Global Services and manufacturing coming out. Nobody cares. Or above positive on both of those, above the 50 level, which is considered to be. I'm looking. We get the beige book tomorrow. I don't think. Maybe somebody will look at it, but I don't think it's material. So we're back to all of this jawboning, and I told you that one thing, we don't have very much news coming out. This was, I think, on Sunday night's video, but we still got the White House. And these guys like the jawbone with the best of them. And, you know, yeah, I find a lot of this activity right now disappointing. I would argue at the moment the fact that the market's rallied back 4%. If someone would please comment and tell me what changed, and the answer is nothing other than somebody said, "Oh, things aren't going. They're going to get better. So just hang with us. It's okay. Everything's okay." And it really hasn't changed much. So I still think maybe it will be. I want it to be. Listen, I'm American. You know, I want these guys to be successful. But, you know, when you start, I think more money's destroyed with this kind of volatility than there is if the market just went down. Okay, at least if the market's trending down, when you start to get these whipsawing markets, they're very, very brutal, especially for those that are short-term traders. You know, more of them get it wrong than right. And it's just a destruction of capital is going on when we see these volatility. Although I would argue that we discussed that this was a possibility of going up to the 21-day moving average. And I'll show you in a minute. That's exactly what we've done. I'm looking at my notes and everything, and there's not a lot to talk about right now other than the jawboning that's going on out there. And so I think what we'll do tonight with this, since we got a little late start, I'll probably be able to shorten up today's video. We'll see what we get out of tomorrow, but I'll just get right into it. I think I'll cover it's. Let me just look at something here real quick, and see if we have got the VPM database updated. Okay, some of it's done. Let me take a look. I'm just looking at some of your comments here. Yeah, I think it's interesting. I kind of blew off. Let me double check this, and I'll cover this while we're. Yeah, this is. Yeah, this is something else here. Okay, let me bring it up. Okay, so look at this. 2,400 buy signals in the database. So yesterday, market's down fairly hard. We get a big tranche of buying, even though the markets were negative. And now we got big buying come up. Now, percentage-wise, it's not a lot because we've been in the dirt, but we are seeing 2,400. We only had, I'm rounding this, I'm doing this in my head, so 2,500 plus. And then on the sell side, we got 144 exits. So big bias. You can see over here, I'll put my cursor by here, it says it's bullish. And I just see somebody, Andy, thanks for the super chat. I'll take a look at that when we get maybe toward the end. Please remind me. But just to keep the flow here, this is fairly impressive. You know, we got good around, and we're looking. Let me change this other screen over here. Telling you this. I redid my trading environment here, and I love this. I love this new screen. I've got a 32-inch monitor that's portrait, and I love it. Yeah, so we're trading right now. Just look at this real quick. The 21-day moving average is 54.32. We're trading 54.24. We're up 130 points, 1.65%. And this is on nothing, folks. Absolutely nothing. Nothing's changed. I don't know. Maybe is there a deal out with Japan and India? I see what Andy's talking about. I may not be up to speed. I've been working on another project intraday, but these are big moves, right? So question is, and we'll go through the details here in a minute and take a look and see what the probabilities are getting through the 21-day. I think we get possibly a little rejection here. The other thing when we talked about, and I'll go through it tonight, but gold got a rejection. I was talking about in that I thought we were very close to a point where we're going to see rejection. Everything kind of reversed. And the patterns that are out there are still very, I would say, very choppy, more of a consolidation. I tried to run the let me just see if it's run or not, just so I can see this. Yeah, so we got a neutral for the data screen, but I'll go through this in a minute. I just want to make sure that was running so I could stay with the flow here. But this is impressive. I think that we're getting this kind of traction. To get usually these big tranches of buys or sells are significant. So big turnaround. I've been telling you folks before that you probably should get WaveTech, and so that you can catch this turnaround. I'm trying to find a time, possibly. I just found out that I have out-of-town guests coming in, so it may have disrupted everything from my standpoint. And I'll still let you know. I'm going to try to do another WaveTech presentation possibly on Friday, but I'll let you know. I'll let you know on Thursday night, and whether that's going to work. I'll have a better handle on that. So let's go ahead, and the rest of the show I'm just going to go through the normal markets and just flow through. We're going to include gold like we did last night. Maybe I'll just touch on the dollar the whole bit that we did last night. Okay, let's kind of go there. All right. So, but here's the caution on this thing. We've got, and this is what I was talking about a couple days ago, maybe yesterday. It all blends together with doing an hour video and then writing a 3,000 word newsletter every night. And if you don't have the newsletter, it's kendallreport.substack.com. 7-day trial, $8 a month, or you can buy it for a year for $80, which ends up to be about $6.50 a month. But anyway, let me blow this up so we can just look at this a little closer. You can see that the configuration here is, here's the 21 coming through here. We're right on that number. Let me get this scaling right. So we're right on that number. There's still a decent angle of attack. In fact, the value is 0.36. So even if we trade just above this 21, we should get a bit of a rejection. And if you look at the PPM1, it is a V top. Okay. Let me point this out so you can see it. So right here, there's a V, and if we look at some of these other numbers here, I think this is interesting. We look at PPM, everything's flat back here, and this was what I was talking about yesterday. The PPM2 is not expanding. It's telling us that we're likely to stay down in this 0.36, 0.25 tells you there's only a 40% probability for the market to close above that. So at 0.36, it's somewhere between 30 and 40%. So 7 times out of 10, it's not going to be able to get over there. We should reject down. And where I drew this circle on this top indicator here is important to pay attention to, because what we're looking at, I'll just draw this right here. Well, this is suggesting that we get the big reaction. And one of the things I talked about last night, this is what I call the echo off of 2 weeks ago from the when we got the big spike up. So we get this spike up. I didn't think we were going to see the follow through, but the probabilities were there to go up to the 21-day moving average, which we've now done. And then we get a rejection from that level. And so I'm saying watch for a rejection in, I would say, sometime even overnight, maybe the London Open. That might be the place to find this. But just know that there's a fairly high probability that we don't trade through and that we're seeing the peak value. Now, ultimately, if we come back into the forecast, the PPM2 is going to stay down hard, so there's going to be heavy resistance right around that level. So this 21-day simple moving average, SMA, is going to be probably a good trading point off of some shorts off of there. So just keep things tight in case the boys in the White House are running their mouths some more. But jawboning only gets you so far. So if they don't get a deal and there's not any news in the next couple of days, folks, you see this thing completely reverse. So we're dealing with it's one thing when we know there's economic reports coming out, that we know that Thursday XYZ is coming out, and we know there's some markets, some volatility, sentiment risk, however you want to look at it. We know those events are coming. But this kind of stuff where somebody just shows up and runs their mouth, there's no way to deal with that. That's random. And we should know that is probably going to be the tactic until they get a deal. And I've stressed this before, is that these guys are going to do whatever it takes to keep things floating until they can't. And if some of the things that I discussed in detail, there's still a lot of markets that have lined up as they are, even though this little rebound, and it was expecting to, as I told you, it looks like to me that to the end of this month, maybe into May, we get this crazy volatility back and forth kind of trading. So just know that that's going to be a continuing feature of this market. And unless there's some material deal and they show us a piece of paper that China signed it and everything's good, whether it's Japan, somebody needs to do something. And so the reaction that we're likely to see from any of this stuff, it could be just volatility. All right. Let's take a quick look. I don't remember the configuration. I'm going to bounce over to a weekly chart here. Yeah, so we get this big reversal 2 weeks ago that was based on the news. You know, once again, news out of the White House. Nothing really happened, but we got news. And then we get this another little spike here, news out of the White House. So they're creating volatility. When we look at the weekly charts, though, and that's why I brought this up, is the projection is that we're going to come back into this higher level. So we're going to challenge the 10-week moving average. That value is right now is 55.93. We'll call it 5,600. So we're 54.24 high so far today, 54.02 right now. But the results of this is that we're going to see momentum burn off. But once again, the big elements is that PPM2 and 3 are telling us there's a ceiling to this market. So even if they can get through the 10-week moving average, you see these red dots. Let me just emphasize this. The red dot is the projecting that we're going to come up into this pattern, and it's very likely that's going to be the case. Where my cursor is right at, that's interesting, that's right at 56, right there in the middle where the red dot. So the forecast, everything is saying we're going to get continuing positive. We'll have to watch what goes on with the WaveTech database, see if we get some more traction, those type of things happen. And this configuration, though, on the weekly is reasonably positive. The key level is going to be the highs that we made last week 54.97, 5,500. We're like right there. We're just a stone's throw away from those numbers. So we'll continue to watch all of this stuff as close as we can and see what happens. But it's an interesting configuration because what we're seeing on the patterns on the algos, both on the dailies and the weeklies, is a bit of a recovery more into the pattern. There's a ceiling up here, extreme ceiling up around 57.50, we'll call it, on the intermediate, and then we're just consolidating. Maybe this is a larger pattern that unfolds for a while. So I'm going to draw in one more pattern, and I meant to do this I think last night or the night before, and I got off the live stream and I went, man, I forgot that. So just like I showed you the pattern that we got several weeks ago, let me show you this. This is the same thing, and I know I mentioned this in the last several days, but let's take a look here. So we'll take So this is the market grid. It's going to do the same thing on a weekly that we saw. It's just going to take several weeks. We're going to see that consolidation. I'll show you the daily here in a minute, but we get this, and meanwhile the market can freely trade randomly within this pattern. So I'm drawing in some fictitious bars, but that's one of those volatility collapses that I talk about. Once you get I call it the bubble, the volatility bubble, that has to contract and normalize so that we can get normal things going on. When I look at the order book now, the order book is normalized quite a bit from where it was a couple of weeks ago. It was completely illiquid, lots of volume, but erratic trading. And now what we're seeing is some stabilization, and there's moments of illiquidity rather than 100% illiquid. But this is the pattern that will unfold before we ultimately get a move to break out or whatever's going to happen. I mentioned, let me just change colors here. Let's draw in this. So what I drew in the other day, this is a weekly chart, was something that ends up testing this 200. This is weekly 200-week moving average, and I think there's a possibility of a swing objective off of this first leg, and then I'm looking at, I showed you the monthly chart, that we could end up with this kind of configuration. I still don't see anything good to come out of this. And the alternative to this scenario that I've put up here right now would be this, is that we just get some kind of consolidation here. The problem that I have, and I'm going to zoom out in a second, problem I have with this scenario, it could last like this, take us into third quarter this year, fourth quarter. I still think there's a recession, a negative GDP coming. I don't see us escaping that. And it's not a lot to do with tariffs per se. In my opinion, it's really just, as I've been talking about, is dealing with all of the excesses that we've seen, maybe over the last several decades, but the last 4 years, with all the money that was thrown at the market between the Federal Reserve and inflation acts and all of that stuff, overinflating everything. I'm not sure any metric that comes out of the government can be trusted. I've been off and on that thread for a while, and I still think there's a lot of issues with this reporting, and the fact that there's not new people in these agencies. They're still the same people. There might be new secretaries, air quote, but nothing's changed within the infrastructure of the bureaucracy that makes these reports every time. And like I said, if you see seasonally adjusted, it should be called seasonally manipulated. So, but this would be the best scenario. So let me take this off and let me show you something else. I want to bring in some perspective here, because without this, we're just going to stick with the chart here for the moment. So this is 20. We'll go to the lows of 2020. But if we go back and just, let me get off the screen. If we look at this whole chart here, this is what we're dealing with here. And having been in the markets for so many years, you're going to get the 22 scenario. And even if you can already see where we're setting up the 22 scenario, I think it was about 20, I forget the exact numbers, so correct me, but I think we were 24% decline. We've already had the 21%, and maybe this is it for this. But the reality is this is as normal as the sun coming up tomorrow. And you can blame people. I always say the markets are always looking for a reason to do something different. And this is the case. It was pretty. So my feeling is this, and let me draw this in while I come up with this. Yeah. So this is my general belief here, is what we're really getting from the standpoint is these big moves. This was the spike down in 2020. I would argue that should have never happened, and it was exaggerated. We should have come down to the 200. And if you look how accurate it's been on that. This is a 200-week moving average. It's come right to this average. The only thing that's happening right now, folks, is that we're seeing this thing starting to roll over a little bit. And so what we could be witnessing is this big consolidation, and maybe we get something like this, but I'm still sticking to something a little more simple, where the potential is, as we come into, this is actually where I'm drawing right now. If on the scale of the chart is actually 27. So let's get a little more aggressive here, and let's just say we're going to more in first quarter. Yeah, this is still. Bear with me, folks. I want this to look right. So we've got this move up, and then what we probably going to get is something like this that will flow through and come down, and ultimately down to the 22 lows or getting close to it. I would say I would give it way better than even. I'd put at least a 50 to 60% probability that we get something like this. And if we do, then that will reset the markets in a big way. And whether this is tariff related or dislocations of capital or any of those things, I don't believe anything that I talked about last night, interest rates going up to potentially going up to above 5% on a 10-year, all of those scenarios, the dollar still coming down to 90, all of that. As far as I'm concerned, nothing's changed since yesterday to today, and this is likely going to be the scenario. Now, what happens when you have the jawboning I'm talking about, and you got messengers coming from the White House to disrupt the market flows and get people to buy into it to the point where right now we're fading just a little bit. We're only up 1.48% right now. But the bottom line is nothing's changed. Okay, and the fact that we get a little volatility doesn't change anything at all. If we get, I would argue, if we get some kind of major deal and we're zero tariffs with China and the EU and the whole world gets rebalanced, then anything's possible. Then markets maybe will go up to new highs. But it's going to be something that big to change the flows that we're seeing here. Because my bottom line is, I think what we're seeing is just purely this consolidation of the last, maybe going back to 2020. The Fed still, they've slowed down the QT, but they've taken a couple plus $1 trillion out of the market off the balance sheet. Everybody's kind of pulling back. The whole immigration thing has been halted. And so it's just, there's no cooking of the books right now. We're consolidating the books, trying to figure out what's real and what's not. And that was the whole point of Doge and the whole scenario there. But this is going to take a while, I think. Maybe like I said, if all those things happen and the China deal, the whole world got rebalanced in trade, the U.S. wins, this thing's going, the price of the S&P will double. We'll be at 10,000 S&P. I don't think that's the case. But what I'm saying is this is the most likely scenario right now. There's too many challenges out there, and especially with 36 working on $37 trillion in debt. Until this stuff is dealt with, there's a lot of systemic issues, my opinion, that are going to keep things from going too far right now, especially recovery. So let me take this one leg off. So for right now, the reality is probably a potential another retest of the lows that we had. And until that point, we're not going to find out whether we know from a technical standpoint whether it goes up or not. Now, one of the edges that I always tell you I have and you have by watching this channel is the database. And it's going to take a lot to get the intermediate database to play into this. It's a long ways off. So I think I'm done with that rant. So let's see, half past the hour. So what I'll do is I'll go to NASDAQ. We'll do NASDAQ. Let's just run through the whole thing that I did last night. I looked at crude oil. Nothing's happening there. It's just kind of a dead market. So let me. So let's do that. Let's go back and let's go to NASDAQ. As I've said before, the NASDAQ and the S&P are cousins. They have a lot of the same information that's in there, so we'll call them cousins. Same patterns, same everything that I've talked about. So just take what I've said on the S&P and take it into that level and look from there. I'm going to back up for 1 second because I didn't look at the fact sheet that ran, and in fact, let me do this. So let's take a look at this fact sheets. This is the wrong fact sheet. This is the right fact sheet. Sorry about that. We'll try it again. So I'll replace this one. This is the wrong one. This is yesterday's. This is today. So we got basically 50-50 up or down. We're looking, there's a newer version of this, and I've been telling you folks I'm working on getting this released. The plan is I'm not sure what the distribution point is. I think I'm going to use Substack because I can put files in, but I'm going to be releasing this platform so you can run this on any stock, anything you want. And but I've got a newer version, and there's going to be just like your iOS phones. There's going to be new releases, and I'll tell you what's changed, what was fixed. There's still little bugs that happen from time to time. So I've written up a whole bunch of stuff on if you see certain things, then to rerun and what prompts to give this. Is all being run on Claude 3.7 Sonnet. So, but as we look through this, we went from just yesterday being, in this consolidation phase. Look at the trend on here. It's trend reversal. So we're seeing a reversal. The database would confirm that. Volatility is still very high. When I did this snapshot, we were up 1.85. So we pulled back a little bit from there. But basically, even the logic is picking up a dramatic rally. This little section I'm highlighting here, I know it's small for you to see. I will have this out in the Substack in tonight. Remember, kendallreport.substack.com. If we look through this further, we're going to see that PPM1 is now like blowing up. It's at 0.75. We went I remember these numbers, don't ask me why. It was like 0.35, 0.17, now it's 0.75, which that's why it's up in the top here. It's saying dramatic rally, 1.85% gain. And we'll see it, like I said, I'm expecting a bit of a rejection off these levels. But as we go through here, you can see RXT, whenever you see a star over here next to the number, that means that's already been met. So I don't know if I haven't reviewed the trades, but I just kind of like to look at this cycle position, and we're in a trend reversal mode, which is interesting. And if you folks recall, I know I don't remember what video it was, I do remember some of the comments, as a few days ago we had this huge basically crash, and we went from that to a market exhaustion. I think it was saying that we had a capitulation is what it was categorized, and from that we got the low out of this environment. So these sheets are pretty strong on recognizing this. There's a whole I've got a data sheet that I put together that has what everything does on here and what's going on. I've got a full documentation that I'm working on, and once I get that done, then we'll get this thing rolled out. But the point is, these are pretty positive just for doing this. And I think I've told you before, I can take this sheet here. There's a couple little trades down here below, but with a couple prompts, I can take this data, and if you get the newsletter, take this and drop it into Claude and ask it to set up option trades. You can use all kinds of information from this, and you can use AI to develop even further ideas and strategies. That's one of the things I plan on doing sometime in the next couple of weeks, is doing some videos on how I use AI for analysis and as a research assistant on some things. And I use a combination of Claude and ChatGPT, and I'm still stuck on 4.0, but I won't go into that now, for another time. But this is an interesting scenario, what's happening, and that's what we're seeing right now. Minor reversal. If we go, I'm looking at the weekly chart here on NASDAQ. If we get through the 10, then the whole next level would be NASDAQ rebounding back up, 19,500, maybe up to 20,000, 20,100. So that it could be a big rebound just to come back into this weekly pattern. And I will come up with some scenarios over the next, doing YouTube videos every day and on the Substack, where I think the pivot point is and when we're likely to see these higher levels reached, and if they're going to be reached. Like I said, very good chance that the White House is your news this week. It's very low quality news from the standpoint of things. I think we get Alphabet earnings. Tesla was a who cares kind of moment. but I think what we're going to see here is just this recovery based on this PPM1. We'll probably see the challenge of the 10-week moving average. Whether it's this week or next week is yet to be seen from that standpoint. So just know that the configuration that's happening here is more of a consolidation, potential basing, or a consolidation before the next leg down. We don't know that answer right now. Anyone that tells you that, I could guess, I already did. I said I think there's another level down, but we've got to see how the data plays out, how the WaveTech database, what kind of traction we get. Can we get traction back on the intermediate? Is there any, and I always talk about this with this being market structure. And I went through, if you go back, not last night's newsletter, but the previous night, you go back to, I went through a description there, and I went through it last night on the video, so you can see it there. But you got to have structure to the markets. You can't just have 7 stocks lead their way up to the rally that we saw. We didn't get a 52.5% compounded rate of return for 23 and 24 because of 7 stocks. They definitely had a lot to do with a major portion of that advance, but all the underlying stocks have to be there. You need participation to make these markets move. Don't let anyone tell you any different. It's never going to change because that's the foundation which everything works off of. And if no foundation, you're not going to do well at all. Okay, so let's see here. We got about 15 minutes. I'm going to buzz through. Let's go ahead. I will look at Treasuries very quickly. Treasuries, the dollar, gold, Bitcoin. We're out of here. Okay. I'll stick with the weekly charts for the moment, and let's address this as well. There's I talked about these fib targets last night, but this volatility is in the same position. When we got that big spike on the upside 2 weeks ago, I actually put the ultra up. Hang on. I was wondering why these numbers didn't match up here. Now we'll try it, but same pattern, just not as a. But we get this. This is the weekly. When we get this is that volatility bubble that I talked about earlier, and what you're likely to see here is the following. Not this. This is old stuff. Sort of matches. Okay, so this big volatility spike, same pattern. We're going to see this market grid, these extremes start to come in, and we'll get the squeeze. I call it the squeeze. And during this time, we can trade anywhere within this range. And then it's way out here coming into September or so until we find out what's going to be this scenario. I'm going to bring up the indicators here in a minute so we can look at what's going on with momentum. But I think we flatten out. We end up back at the, we'll call it 4. We're just going to do broad numbers, 4 to 440 range. We might print down to 395. But you're just going to whipsaw in here, and the mouthpieces out of the White House will be jawboning everything they can. So let's take a quick look at this. So from the indicators, the PPM 2, 3, and the PPM 200. Everything is you can see how the moving averages are being forecasted, that we're just going to come in the range, and the squeeze play will be right around these moving averages. And right now, let me just, there is some, bear with me a second. Yeah, so we're looking at 423 on the low end of this thing, 423, 441 on the upside. So we're going to get squeezed into that range, and it's going to take at least 4 to 6 weeks. And we could trade all the way up into the top end of the range. We could trade much higher, but we're going to get, the squeeze play is on here. And it's just going to take time when you're looking at a weekly chart. I'm going to go back. We'll look at the daily just for a minute, just to get. So you can see even the daily is forecasting everything starting to come in. This is interesting. We've got new Fibonacci targets to the downside on the 10-year right now. Let me get those values. 409, 390. That's where. So we're going to come back in, and you can see some stabilization being forecast. We'll see what happens, but that range on that weekly chart is probably the valid one, somewhere between 390s, extreme 395, 440 on the upside. So this is going to be likely due to lots of people talking, and probably Bassett is the primary mouthpiece right now. And so anyway, so that's it for the 10-year. Let's go on and let's take a look at, let's do the dollar. So we got the big reversal off the lows yesterday. We came right into, you'll notice right here, the Fibonacci target. We came right into Fib targets. PPM1, it's very interesting that all of the momentum structures to everything that we're seeing here, as we've declined, we're seeing a consolidation, and the short-term indicators, PPM1, is suggesting that momentum's going to increase. We're going to get above the 10-period moving average, so that's going to be 90, 99, 92. So we're going to get back probably over 100. We'll come up into the 21, that declining 21-period moving average. So there's some positive movement. If all that's going to happen, then probably we're going to see a positive rotation as well as we go through all of these markets. There's going to otherwise be a bias to the upside. We'll see if we get rejections. Just reviewing back, looking back on what I talked about earlier, S&P, if we're going to get rejections around the 21-day moving average, or really the high right now. We're still up 1.53% on the session right now. So we're still seeing very positive, long ways off from the opening in the morning. And like I said, there's no really material news coming out. Some housing news tomorrow. It's all going to be what's coming out of the White House. And if they basically the entire comments were done, I think it may have been done on Bloomberg's being used as the mouthpiece here. And so they're jawboning this thing to say, hey, we're going to see a moderation in this China-U.S. thing. We'll see. But that was enough to get us here. So we got a 4% rally off of some words out of some guy who works in the White House. He is Secretary of Treasury, but it's just words. There's no material. So it is what it is. All right, moving on. I think gold is getting pretty interesting. It's kind of rebounding here as well. But last night I talked about the peak. I also discussed it in the Substack. I've been covering gold the last few days. I think it needs to be covered right now. And we're looking at big momentum shift potentially coming in gold, coming down. We already went down to the 10-period moving average. And you can see let me emphasize this, the red dots on this page are the forecasts for how the expectation for the closing prices. It doesn't tell you any ranges, but I will give you folks a secret. If you have the indicators, you could put the WTAR forecast on there, and you can choose a field that you're going to forecast. This is a pro tip, we'll call it. You could choose the market grid as a forecast, and you could forecast. Maybe I'll do that for tomorrow, but you could forecast the extreme values on the market grid, so you could actually see how the market grid is likely to flow. I play with it a little bit. Accuracy, I haven't spent enough time with it, but you can start to get a feel for that collapse of volatility. I'll have to take a look at that maybe in tomorrow's broadcast. I will do that. But this, the upward slope on this 10-period moving average is what it's all about. That's your angle of attack. That's what I call your demand line. It's so high. Anytime you see anything close to the 10, like overnight, you should be buying anything that's there. So there's a trade-off, this 10-period moving average, for at least another 3 to 5 days or longer. Let's take a look at the, even though we see momentum peaking out here, it's going until it crosses, I'm just looking, Friday is forecast to cross its first derivative. Until that happens, the trade is off the 10-day moving average, okay? Should be able to do some pretty serious scalping. There's good volume and lots of volatility in the gold market right now. All right, where are we at? 8 minutes, 9 minutes to go. So Bitcoin, man, what a rocket ship. I was talking about this in last night's Substack. We didn't get a chance to cover it yesterday, but look at this. We had, going back to, just getting a date here, the 13th of April, we got fib targets of 86,400, 90,987, and 93,700. So we come over to today's action. Earlier today, I just found out this chart rolls over at 1700 at right about the time I started broadcast tonight. So that is that's good to know. So this, I thought the chart rolled over at midnight on Eastern time, and it obviously rolls over at 8 o'clock Eastern time. So anyway, it was good. I'm going to catch this click. But what we got yesterday was a high of 93,928. The projection high 93,790 that was done almost 2 weeks ago. So these patterns are hit. As I've told you before, let me just do something here. I'm going to put okay, they're not very dark. Boy. Okay. Bear with me 1 second because I want you folks to see this. I'm not sure which value to do. 1 second. Yeah, unfortunate. I'm not sure which value, so it's going to be hard. I'm going to blow it up pretty big. It's hard to see. I'm sure on your screens it might be hard, but there's lines. It's marking all the high lows, and when it marked this low here on the 7th of April, and then when this, we got a marked high in here, and then we got these projections coming out of this pattern. And this is where the fib targets came from. So we've now satisfied that. And we're looking at the forecast for the close. You can see that Bitcoin is forecast to go sideways from here. We're getting peak momentum on, but it's kind of a rolling sense. I'll try to explain this the best I can. Is that you get the short-term indicators to kick in and they peak out, and then you have to look at ppm2. So the peak value is going to be on Friday, but the ppm2 2 isn't going to peak out until Monday or Tuesday. So you have this residual underlying bullishness that will lie in. So you're still going to have a bias to the upside. On the close, I'm looking at it here, so you can see it. On the close that came in at 5 o'clock today, we got an RTX sell signal. That means 1 to 2 days sideways. And the other thing we'll watch for is if Bitcoin closes a bit lower at 24 hours from now, if it closes a bit lower, then the market grid's probably going to turn down and we're going to get a little bit of a consolidation. And that's what's being forecast by the red dot indicator. So it kind of gives you that guidance. And we were seeing, if we went back a couple sessions ago, and you can go back on yesterday, we did not cover Bitcoin. But if you look at even the Substack and what's being forecasted there, you'll see that we are forecasting higher prices. I didn't know that we were going to get up to these fib targets, but man, it just exploded today. So anyway, that's a really strong indication of, I think, of the sentiment that's in the market from the standpoint of the risk-on situation. Bitcoin's got a little bit different profile overall, but because if you recall what I was just talking about in all the other indexes, we have PPM1 strong, showing acceleration, PPM2 and 3 flat. In this case, we got PPM1, PPM2, and PPM3 all forecasting strength in the market. So that is a key element to watch for here. Okay, folks, once again, I haven't had a chance to interact with you, but just looking at some comments here. Yeah, so I'll just summarize what I've been saying tonight is the markets are being driven, and I made this reference, I know on Sunday night, they're being driven by the White House. There was going to be a low, pretty much benign news cycle this week, couple earnings. There weren't even really any significant earnings coming out. So we're seeing everything what we're seeing here is going to be dictated by the mouthpieces out of the White House and whatever news they can get out to control market. I would say control the market downside, and maybe it is going to quiet down. I would say if Bessett's comments that triggered this rally don't come to fruition, meaning that there is no material, there's some press release, some kind of rhetoric around this that says, yeah, things are calming down a little bit. Until we see that, then it's just going to be noise that's being created in the market. And I still think this is noise. We'll see if we can get any kind of reaction here. We're still up 83 handles overnight right now on the S&P, just looking at the action here. And we've already printed, I'm just looking at numbers. Yeah, we've already printed above RTX tonight. So we've already printed above the forecast of the market grid tonight. So, watch out. I still think I'm smelling some sort of rejection around these points on the S&P to come back in. But with 2,000 buys, we're seeing a shift. So be very careful on how you trade this market. So don't be too bold in getting too short. Maybe it's still buy the dipper, but it's going to be plenty of volatility. Anyway, folks, I'm just looking here at a couple comments. There was something that caught my eye. Anyway, folks, I'm glad to be back every day. It's Tuesday. We got 2 more videos, and I'll let you know if there's going to be a Wave Tech video on Friday or not. Like I said, I just found out right before I came live that there get some out-of-town guests coming in, which may not allow for me to participate on Friday during the day. Anyway, thank you so much. Appreciate it. Hit the like button before you leave and subscribe. And we picked up quite a few subscribers since I've come back. So keep hitting those buttons. All right. It's free. All right, folks, have a great evening. Don't forget to get the Substack, kendallreport.substack.com, free trial 7 days, $8 a month, $80 a year. And then if you don't have the indicators, you should check that out because you're going to want the indicators with the AI stuff that I'm going to be releasing for Claude. Anyway, have a great evening. We'll talk to you soon.